Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Sunday, February 23rd, 2025. So on Friday, we saw the S&P get absolutely slaughtered. I'm not really quite sure what the sell-off was all about. Maybe it was the investor sentiment. I don't know, but it was kind of strange because there was nothing that was really off the hook that would have caused panic. But these are some of the reasons why I was saying you had to be very, very careful. So this is the put call ratio, and when we're down at these levels, it means that everybody is complacent. They're only looking for the S&P to go higher, and they don't have any type of protection. So I said typically, when we have the put call ratio that's at these levels, we don't get any, just runaway market to the upside because everybody's positioned that way. And as we know, Mr. Market usually does what the opposite what everybody is expecting. So this was one of my reasons to say be very careful. I said it's not a trading thing, but it gives you a kind of a barometer of where we are. So this is the danger zone where, yes, we can continue up, but when it's here, we typically get these types of moves to the downside. So this was my one thing. You can see we did get a spike up on Friday, so people are starting to wake up. When we get up to these levels, this is where you want to be buying the dip and saying, okay, we want to start building our position because typically the move starts up once we're here. So that's what I'm kind of waiting for, where I'm going to give the green light and say, okay, we can start looking, for long setups because everybody's pretty much got, scared and they got washed out of the market. So that's one. The next one, hang on one second. Okay, so my next reasoning was the VIX, where we're down. When you're in this area here, it's a complacency zone, and you want to be careful because typically, the VIX can go a while when staying at these levels where we head up, but you at some point you're going to get this spike, and you can see on Friday we actually got that spike. So now people are starting to wake up and say, okay, well, maybe this market doesn't just go straight up. And it's one of the reasons why I've been saying, you have to be very, very careful because they're going to pull the rug out. And I didn't know what the catalyst was. I still, a little confused on what it was on Friday, but it was a washout. And, everybody that was buying the dip on the downside got caught, having to, panic sell towards the end. So this is the daily chart of the S&P. You can see we landed right at the 50-day moving average. I believe we're going to get a little bit of a bounce for maybe the next couple days. I would be guessing somewhere up into the 60, right on that, say 60, 67, and we possibly even come up somewhere up into the 6100. That would be a decent bounce as long as the bears hold down this level and then they can take out these lows before these highs get taken out. That's when we start looking at and saying, okay, I think this gap is going to get filled here, and that's at 58.62. So we have to just wait and see what happens over the next couple days. I think if we get another big sell-off, something else is going on, and you do not want to be trying to catch this falling knife. But I'm on the side that I believe we will get some type of little bounce coming, and it may not be little. It could be pretty much 78% of the drop that we had from these highs. So that's what I would be looking at. So now if we take a look at this, I'm sorry, I want to go back for one more thing. So you can see this little high right here that got above here, this actually set up bearish divergences on the daily chart. So there's reasons to be really wanting to look both ways. And, even though we got the bounce on the VIX and we saw some people buying protective puts, they still have a little bit of a ways to go before they're into, a true buy area. So the 60-minute chart, here you can see this is from this low to this high. We landed right at the 62% retracement. That's 60.09. It's a level I've been showing for a while. I didn't think we were going to get here on Friday, so I didn't even put it into the into the mix on it. I didn't think we were going to have a 100-point drop, but you can see buyers stepped in at the 62%. If we get a bounce again, this is just the first resistance area. That's going to be the 60.45, but more important is going to be up here at the 50, where that's at 60.84, where you can see we now have price resistance as well as the 50-day moving average. So this is really what I think the Bulls need to get through to be able to get themselves out of harm's way. But if you remember, I said this is the area that I would be interested in shorting. This is the area I'd be interested in buying. Now, I don't believe the lows are in. I think these will get taken out and we'll make a move down to the 59.70 or do a full retracement down to the 59.23. And the reason why is you can see we're pretty oversold right now on the momentum, but we don't have any type of bullish divergence on the 60, and this is coming off a bearish divergence. When we go to the 15-minute chart, you can see there's no bullish divergences. So if we get the bounce, that's going to bring momentum back up, and then when we take out these lows, maybe they hold the lows at 6,000 and then use that, because that will give us some bullish divergences. So that's what we want to see. If they lose that, then the next spot we're going to be looking at is going to be the 59.71. But on the way up, this is. Let me take this off here. This is why I was thinking we were going to make the move down to the 60.43, was that ABC move, but we went right through that. So on the upside, if we get any kind of bounce, really this is going to be the first area that the Bulls are going to have to get through, 60.42. If they get above it, you can see you have a little bit of resistance here at the 60.64, but my guess is we'll come up and test the moving average as well as this kind of resistance right here. So that would have us looking somewhere up at the 60.71. And then up here is we'd be looking at the 60.85. So there's there's some room to the upside that we may be able to make some trades and sell some put premium. But I think once we get up to these levels, this is where the bears are going to be waiting, anywhere from the 60.72 up to the 61.23. So this is your resistance area right here. Right here, if they get above it, which I think they will, we'll probably come up and just chop around. So I'm thinking the next couple days we could be moving, to the upside and maybe a spike up and we pull back some. But it's kind of what I'm thinking. But if they open up to the downside, then we have to keep an eye on the 60.02. And then, as I said, the next resistance support is 59.71. So let's see what plays out tomorrow. Enjoy the rest of your weekend, and I will talk to you guys in the morning.